Kick us off here. Hello, everyone. Thanks for joining us today. I'm sure we'll have some other people trickling in here, but we're going to get started. My name is Corey Donovan. I'm a co-founder of Impact PHL, and now I run point on community engagement for the organization. This year's 10 years for us, which seemed to have happened quickly and also seems to have been a long time since we headed down this road. But I want to thank you for being here today. We have a really good conversation that Mike Wang has helped to curate here and some great speakers to help share their perspectives. Um, and before we get into things, I just had a couple of quick housekeeping items and announcements. First of all, I want to thank all of our sponsors and our funders. We literally wouldn't exist without them. We operate completely on contributions and sponsorships and donations. So want to thank all the folks that are involved here. And there's also some folks whose names aren't mentioned here that choose to be anonymous, but want to thank them. Also want to give you a heads up. We have some good webinars coming up in March. We don't have a date nailed down yet, but we'll be doing a program on how AI is going to affect local communities and how AI might affect Philadelphia's future, good and bad, potentially, and how capital plays a role. So I'm pretty excited about that one. We have another really good webinar lined up in April around the silver tsunami and how private equity is buying up local businesses and the opportunity for Philadelphia and other communities. But I'm getting ahead of myself there. That's not on the slide. We also have Total Impact Summit coming up in May. The early bird discount code is about to expire this coming Monday. So if you're interested in attending, the code is earlybird26, all one word, all caps. And sign up for that before Monday at noon. Last announcement or housekeeping item is that this program is being recorded, so we'll make sure that this is up on the event page of our website, which we have sort of a permanent library there of anything that's been recorded previously, any of our prior Impact PHL conversations up there, and we'll also send it out via email to everyone who's registered for this event. If you have any questions during the conversation here, put it in the chat. Mike and the speakers and I will be scanning that for what questions are being asked. And with that, I'll hand things over to Mike to take us off. Thanks.
Great. Thanks, Corey. Welcome. Good afternoon to everybody. Really excited to help moderate what I hope will be a super exciting conversation today. And frankly, one in which we hope you'll roll up your sleeves and get involved. Let me tell you a little bit about what our objectives are and who we have with us, and then we'll get started and jump right in. So I think there's really three goals as I see it for our conversation today. The first is to offer up a way of thinking about the impact that each of you is having as investors, as advisors out in the field. That's perhaps a little bit more comprehensive. The second objective for today is to hear from three really knowledgeable panelists about their experience in working with investors, and in the case of one of our panelists, with an advisor on moving their investment portfolio towards more of an impact model. What was hard about that? What worked about that? And then finally, our kind of last objective is to give you some concrete tools. So whenever we do a session like this, we always try to make it really concrete so that you can walk away with something of value. Let me take 20 seconds, give you a quick introduction for myself and let you know who we have with us as panelists. And then we're going to get started with a Zoom poll question in just a moment. So again, my name is Mike Wang. I'm a partner with Building Impact Partners. We are a philanthropy advising firm that works with families, family offices, foundations, ranging in size from small all the way up to very large institutional funders all over the country. And what we do is we help bridge the gap between big ideas, big intentions, and actual impact on the ground. Joining us on the panel today, we have Lisa Renstrom, who's the co-founder at Values Advisor and the former owner-president of multiple different hotels, who will be sharing some perspective. We have Homer Robinson, who's an impact investor and co-founder of Parkera and former president and CEO of the Kaiserman Company. And we have Brian Bernhardt, who is an alternative investments director and managing director at Morgan Stanley Private Wealth Management. So I've gotten to know these folks a little bit in preparation for today. Really excited to hear from them. But before we do, we want to get a little bit of a better sense on who's in the room and what your current thinking is. And so we are going to bring up a couple of Zoom polls here. And the first poll is a question for you. To what extent are your investments currently aligned with your personal values and philanthropy? So take a second and go ahead and vote on that question. And then when you're done, go ahead and take a look at the second question, which is, have you had a conversation with your wealth advisor or family office about your values? And by the way, if you are on this call and you're an advisor, you can flip it. You can ask if you've had a question with each of your clients about their values. So take a second and vote, and then we'll take a look at the results. Take another second. Okay, and Impact PHL team, are we able to share out the results of the poll? Great, thank you so much. Okay, so it looks like we have a pretty good mix, in the room for both questions. And what I'm psyched to see is it seems like 2/3 of us on the call are talking regularly about our values, and so hopefully we'll walk away with some additional insight today, as well as some concrete tools. Okay. Without further ado, I want to turn our attention to our panelists. First of all, welcome, all three of you. What I'd like to say to the sort of audience, the viewing audience today, is we are going to have an opportunity towards the end here to do some Q&A with our panelists. So please keep that in mind. To kick us off, I want to show kind of a slide that's something we use in our firm with clients quite a bit. And I call this our kind of aligning all your forms of capital slide. And so the idea here is to kind of reframe a little bit how we're thinking about our investments as part of a broader impact strategy. And so what we talk to our clients about at my firm is like, look, you really have multiple forms of capital at your disposal. Of course, you have your philanthropy, your charitable capital, money that you're giving away to great causes. You have your political activism, it's another form of capital, okay? Political giving, your advocacy, and how you sort of show up in the political context. You have your time and talent, board service, volunteering. You've got social capital, and that's the sort of cachet you have amongst your network and your friends. And then finally, as Corey likes to say, you have where your money sleeps at night, where your investments are. What we have found is that when you view each of these as part of a more holistic approach to deploying your capital for change, as an individual investor, you tend to feel more deeper alignment with your values, and you tend to be in sort of a mind space of building legacy, which can be a really powerful and rewarding endeavor. And so that's kind of the frame that we're walking into this today with. What does it look like to, rather than treat each of these things as discrete and sort of independent variables in our life, what would it look like to sort of pull these together and operate in a little bit more of a holistic view? And so let's switch the screen back to our panelists. And Homer, I'm going to start with you. Many of us are already using some combination of these levers. And I am curious, when you first started seeing your investments as a means of creating impact.
Sure. Thanks, Mike, and hi, everybody. It was pretty clear for me that all got triggered when we first started having children about 20 years ago. And I hadn't given that much thought prior to that. And I also had less to work with at the time. But it became clear to me that I didn't want to. There were two things that happened. One was the switch in my head about climate change really tripped at that point. That's when I started thinking long term about how would I explain to my kids what was I doing about it when it was so obvious that it was going to be an issue that they'd be dealing with for their entire lives. And that led to, okay, what can I do? Not just from, I changed my career at that time to do work that was more directly related to climate change mitigation. And then I also um, started thinking about how to put my assets to work. How could I invest in a way that I would, whatever I would leave to them would, they would at least not feel bad about, and they might feel pride in.
Great. Thanks, Homer. Lisa, I'd like to turn to you next. What, from your vantage point, is the upside of thinking about an individual investor's kind of full aspirations, not just the idea of wealth accumulation? Oh, you're on mute, Lisa. You got to unmute yourself there. Yeah.
If you go back to that image that you showed us, I recently heard the word poly capital. So we need all of our poly capital to address this poly crisis. So when you include your wealth, I mean, it eliminates the dissonance. Like there's so much discordance and dissonance in the world, and even sometimes you can't do and act in the ways that you want to because the system just, like ordering on Amazon. Sometimes you just, that kinds of little things. But so aligning your money and your investments with the world you want to see and the world you want to create, um, it 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 makes it a full conversation. And so wealth stops being just an endpoint and it becomes a tool to do the other things that you want to do in life.
I love that, a tool to do the other things in the broader aspirations that folks have. I think that's a really great insight. Brian, I'd love to bring you into the conversation. You work with many clients, and I'm sure many of them are involved either with philanthropy or with board service. I'm wondering how you see that involvement as an on-ramp to discussing what they're doing with their investments and as a roadmap in a way to understand kind of their broader aspirations.
Thanks, Mike. Yeah, I mean, that's a wonderful start for sure. If a client begins to talk about their philanthropic goals and the board service and their community involvement. But I'd say we don't really wait or hope that the client's going to disclose that. We try to start the discovery process with a client by really trying to learn about what they care about. What are the values that drive them? The more that we can do that up front in that discovery process with the family that we're working with, the better we can be proactive in helping them to find solutions that will ultimately meet the goals that they care about. So we like to try to start that conversation as simply as, what is it that you and your family care about? What are the values that you hold as a family? And I think your pools of capital are right on. Like a lot of families understand those pools of capital as it relates to philanthropic dollars, as it relates to their volunteer time, even their political capital and voting. But a lot don't necessarily recognize that that can translate to how your investments can be aligned with your values. So for us, it's really about that discovery process at the beginning. Again, it's great if they volunteer that, but we don't want to wait for that. We want to begin that conversation at that high level, and then figure out ways that we can align what they're doing with their different pools of capital right off the bat.
Well, I love what you said there, Brian. A lot of times, in my experience, folks find it easier, simpler, if you will, to align kind of their philanthropic capital with their political capital, with how they're spending their time. But there is some dissonance, Lisa, to use your word, when it comes to aligning their investment capital. And so it stands to reason that something holds people back. And that's probably true both on the client side, on the investor side, as well as on the advisor's side. And that's kind of what I'd like to talk about next. Homer, you're on the investor side. What was hardest for you about getting started? Was there hesitation, and what was causing that, and what helped you get over the hump?
Yeah, I mean, like anything else, it's about educating myself or educating oneself about, and it starts with trying to understand what my priorities were. I had come out of working for as a public interest lawyer for about a decade, and so I'd done a lot of work in social justice areas, and I hadn't paid any attention really to climate change until, like I said, my kids were born. And so it started with understanding what were at the root causes of the problem I was trying to address, or was concerned about anyway, and then looking to see if there were any possible market solutions to them. I'd spent a lot of time in the nonprofit world, and then moved to start working for a for-profit affordable housing developer that did green affordable housing all over the country, a guy named Jonathan Rose, who's really sort of the thought leader in that area. And I learned that you can address so many things through the private sector and using those dollars in a way that governments and nonprofits aren't set up to do. So that became really interesting to me. And I would say once I started to investigate that, I settled on a couple of themes. I really wanted to just invest in areas that I knew something about or was interested in learning about, so that it wouldn't be this scattershot. It's such a huge universe of opportunity. And I really wanted to, drill down so that I wasn't a mile wide and an inch deep.
That's great. So it sounds like knowledge. There was kind of like what I heard in your answer was some like shifting of your mindset, some more expansive thinking, and just like some knowledge, like filling in some gaps and becoming aware of some things, which I think is
Yeah,
really, really
and trusting that there is a market component to addressing these issues. I think that's something that's really hard for investors who are new to this world to believe in, that this isn't a concessionary approach to dealing with an issue or a problem, that it's actually, that the returns come on multiple levels and aren't just purely financial. That's what's so gratifying about it.
Yeah, that's great. Brian, you are an advisor who works with many, many clients. And, I think I probably speak for the entire audience in observing that, different advisors have a little bit of a different affect, a little bit of a different mindset toward this idea of impact investing. I'm wondering, from your perspective, what holds advisors back? Is it fear of underperformance? Is it like firm-wide policy? Are there compliance issues? Is it just a lack of awareness? Like, what are some of the factors in your experience that might hold some of your kind of peers across the field back from helping their clients discover impact investing as a tool? Oh, you're on mute, Brian. You are on mute again. You gotta come off.
Sorry, guys. Yeah, I think it's all of those in some way. I'd say, just picking off of what Homer said, look, you can find data to make your point one way or the other on the performance of impact investments, but I think that issue has largely been put to rest, that you have to sacrifice returns in order to be value aligned in your investments. That clearly is not the case. There's no sacrifice there. But I think that some advisors hear that and still believe it. And at some of the impact conferences I've gone to at Impact PHL, I've heard that theme many times, where those who are allocating capital feel like because they have fiduciary responsibility, they have to pay attention to performance. I hope we can soon, if we haven't already, put that to rest, that you actually have to make that sacrifice. So that's one. But picking up on some of your other points that you made, I think they're all a factor in some way or another for some advisors. We have some restrictions in terms of what we can recommend, and if it's not part of our platform, then we're not allowed to make a hard recommendation, yes or no. I think some advisors worry about losing assets when advisors are investing outside of the platform where their advisor works. To me, I think that's short-sighted. I think there's a lot of value in helping your clients achieve their goals with their money. And if you're doing that, I think you're winning relationships, not losing relationships. And then I think there really is still a lack of knowledge on the broader product set that's out there and ways that you can do it. I'll just go back to what I said at the beginning of the last question, which is, I think if advisors become more proactive in the beginning of a relationship and ask those questions, they'll realize that there are many, many families that they probably work with today that care about this, that want ways that they can reflect their values and their investments that they just don't know about at this point.
Brian, I want to ask a follow-up before, Lisa, I turn to you. And that is, one of the things I hear is that oftentimes this is something that investors want, that clients really want to do, but it isn't the default. And I'm wondering if you can just talk a little bit about the danger, both from the advisor's perspective, but also from the client's perspective, when advisor and client, or an investor and advisor, are kind of misaligned in how they're thinking about impact investing.
Yeah. Again, I keep going back to this idea of knowing your client and doing the discovery process and being aligned with what they care about. The danger for the advisor is that somebody else will have that conversation with your client about what they care about and will be able to show them ways that they can achieve that through their investment portfolios. So that is a real danger. I think the danger from the client side, others on this call can speak better to that, but I think the danger on the client side is that they're just not aware of the breadth of products and ways that you can invest that truly do achieve what it is you're trying to achieve. We have to dispel the narrative that, again, going back to this idea of fiduciary responsibility and having to sacrifice returns, we have to dispel that. People need to understand that the investment universe for impact investing exists, is robust, and can achieve your goals without having to worry about underperformance.
Yeah. Now, Lisa, you've worn and wear a lot of different hats, and so have had several different vantage points. I'm wondering what your take is on this question. What for you is the thing that holds advisors back, or advisors and investors back, from kind of getting on the same page, pursuing a strategy, having these conversations?
Agree with everything that has already been said. And I'll highlight, I think, two things. One is simply training. Traditional advisors have been trained to optimize returns and manage risk, and they don't understand that they can do that within the values aligned framework. And so when somebody brings, and they don't understand values. What are values? Why are we talking about values? We're talking about finance. And so it's like another language, and they don't have any fluency in this language. They've not been trained. And so they haven't had it in their CFA. I mean, maybe today the CFA training has more of it. I'm not sure. But they deflect and they say, no, that's not what we want to do. Second, I think they're scared. Somebody brought up the concept of fiduciary responsibility, but there's a lot of conversations about what really is fiduciary responsibility, and aren't material risks actually require you to include climate change, social instability, governance failures as a part of the risk that you need to measure? And if you ignore those, it's actually a breach of your your fiduciary duty. I guess those, yeah. And I'll also just want to mention there, I mean, I've had a lot of conversations with, hundreds or thousands of people about divestment, about their portfolios. And some people really do say, like, I don't want the maximum return if I want a fair return. I want a good return. And these are people who are talking about their IRAs, and these are ultra high net worth. And so a lot of the high net worth, ultra high net worth also are having the conversation with themselves about what is enough. And do I want to create this is the portfolio that is enough for me and my family. And I wanted to really make a difference in the world. And maybe I don't need market rate return. Maybe there's a externality of market rate return that I'd like to not be a part of.
Yeah. as I hear your answer, Lisa, and this is true for all of you, I'm reminded Grace Hopper was a pioneer in computing and engineering, and she very famously said, the most dangerous phrase in the English language is "we've always done it this way," and it seems like that's a real theme. In a moment, I'm going to ask our panelists for advice to investors on sort of how they can break through some of these barriers. But I am curious for our audience whether or not these are the same barriers that resonate for you. I would invite you to just take about 20 seconds, and we're going to do a little Zoom chat storm here. So in the chat, would love for you to, in one or two words or phrases, what's the number one thing that you've experienced that's held you back, or when you look at your peers has held your peers back, or your clients has held your clients back? Just trying to get a sense for whether the barriers that our panelists are raising are in fact the barriers that you all are experiencing, or whether there's something else. So take a second if you're on the call and just type into the chat and circulate. And again, I won't call on you. We're just trying to read some. But again, it's what are the key one or two barriers, could be as short as a word, that for you has sort of come up. Inertia, I see. Good. Come on, audience members. I know you've got it in you.
I have about 20. I can just keep typing.
Keep going. I'm going to give it 10 more seconds. Not knowing what is available, knowledge and knowledge gap. I think that's a really, really good one. Yeah. Perceived risks, data, dissonance between this idea of values and finance. That's really good. I think that's really, really insightful. Any others? I told you were going to have to work today, audience. Great. Well, let me turn back to our panelists for a moment. We got one more. The idea of having impact with investments versus driving return from sources. Yes, exactly. Okay, so those inherent downline tensions, I think that show up a lot. Very, very good. Thank you, Matt. I want to turn it back to our panelists and just sort of say, like, if you were going to give advice to some of the folks on this call about ways to bust through these barriers, and I know that we're focusing a lot on barriers, but in my experience, without having a candid conversation on the barriers, like, a lot of this stuff doesn't get past the starting line. And so if you were going to give some advice to either investors or to advisors for that matter on how to bust through some of those barriers, what would be one or two pieces of advice you would give? And Homer, I'm going to start with you, and then I'll go to Brian, and then I'll go to Lisa.
Sure. I think there are two clear ones for me. The first is, as I mentioned earlier, to pick a theme, pick a lane, and stick with it. As you get into this world, there are so many opportunities, and so you really have to be good at saying no. And the easiest way to say no is to just say, that's just not where I play. The second one Lisa mentioned, which is create a pool. Understand where does your anxiety level about money top off? And if you've got anything above that, make that the pool that you say, you know what, if this went to zero, like any other investment could, if this went to zero, my life wouldn't change, and my goals for my family wouldn't change. And what I'm going to do is try and make this into a force multiplier about the things I care about. So I think it's helpful, in both of my answers are about like finding limits, creating, the baseline, and then being able to work on the other side of that.
That's terrific. Brian, what's your advice to?
Yeah, I'd say mine are questions. So if your advisor is not being proactive with you, I think you should ask the questions. And I think there's probably a lot, but I'd say two questions that I think would make sense. The first being something like, does your process approach, or does your platform allow me to align my investments with my values? So just keep it that simple. Does your investment platform allow me to align my investments with my values? And see what your advisor says. If they say, well, I've never been asked that before, then maybe that's telling. And if they say, oh, yes, it does, maybe we should have a conversation around that. Then you can kind of use that as a jumping off point. The other thing I'd say is, to your point, Mike, at the beginning around the different pools of capital, it doesn't just have to be investments, and advisors can provide advice across a lot of different areas of your wealth situation. So I would say the second question would be, what other services can you provide me that helps me to deploy my various pools of capital in ways to help me achieve my goals? So I think those two questions alone will give you really good insight into how your advisor can or can't actually work with you to achieve what it is you're trying to achieve.
That's great. Lisa, what advice do you have for our audience members?
I advise if you have a advisor who this is new to, give them 3 things that you want to do. And Mike, we can send out 20 things, little things that an advisor, or Brian could create 20 things an advisor could do in 3 to 6 months, like invest in some CDFIs, transfer some cash to some CDFIs. Give them 3 to 6 months to do that. And if they do it well, say, great, let's do 3 more. If they don't, fire them and go to Values Advisor and get a values-aligned financial advisor. Second thing is somebody who knows how to do this, because you just don't go to a doctor to fix your bone with someone who doesn't know orthopedics. So second thing is join a group and do this in community. Impact Philadelphia, you guys are creating these conversations. It's so important to have a group. If you're a woman, go to Invest for Better. They accept men too, but it's mostly women. And it doesn't cost anything. And they have it's just a beautiful organization. Babby, who introduced me to Impact Philadelphia, does investors circles, is on the board. And they, in community, look at angel investing. So if you go to the Values Advisor Partners page, there's 50 organizations that you can join and do this in community with others. And I find that talking about it with others in person or on Zooms is very, very helpful.
That's great. So, okay, we've talked a lot for the last 20 minutes or so about barriers and about busting through barriers. But it doesn't end there, right? That's step one. But let's assume we have. Let's assume we've broken the logjam. We've overcome the inherent fears. We're starting a conversation. I want to talk for a couple of minutes about what happens next. In my experience and in my observation, the best advisors don't do this alone. They are part of a team, right? And sometimes they quarterback that team. Lisa, I'm going to start with you here. I wonder if you could describe for our audience what a collaborative model might look like, in which advisor and client are participating around a team. You mentioned in your answer a moment ago, like find experts, find people who really do this. Can you talk a little bit about how great advisors work in partnership, with other advisors and sort of players in the field that are working with that client?
Yeah, I mean, it's just like having a general contractor or, the quarterback. And sometimes you as the investor play that role, and sometimes your advisor can play that role. I'll just speak also, it's time consuming. And so sometimes you have to compensate more to do that kind of work, which is okay because it's important work. If a person has any kind of a philanthropy advisor, or of course their accountants and their tax leadership. So the role of coordinator and to collaborate on, I mean, again, it's kind of like this polycapital thing. People who can take your taxes, your philanthropy, your investments, your values, and put it together.
That's great. Homer, from your perspective, I'm wondering what's been critical for you to better connect the dots between your portfolio and impact. And I know when we spoke, you mentioned something really intriguing, that you don't rely on your wealth advisor to do all of this. You really think about the kind of holistic picture. So could you talk a little bit about what for you this kind of collaborative team-based approach might look like?
Sure. And full disclosure, Brian is my wealth manager, my wealth advisor. We've been working together for over a decade.
How's he doing? No, I'm just kidding.
Well, it's a critical role, right? Because a lot of the investment that I do on my own is in the venture side. I really like working with founders, and I have found a lot of value for myself and a lot of education. I've just been able to learn about so many things from these founders. And so, I rely on Brian to tell me, hey, what's my liquidity here? Anytime I come back with a new investment, he and I discuss it. I send him the deck. We talk about the prospects. And then, what I want to know is, can I go to zero on this and and maintain what, like I said, we set sort of a level of, okay, this is what I'm comfortable with. And then, how are we going to raise the funds for that if it's not currently liquid? So there's a lot of back and forth with him on that. I have over the years, developed sort of an infrastructure of people that I co-invest with and that I look at deals with. And that's really come from, this idea of, as like I said, focusing on a theme. You really get to know people in that space. Whatever the space is, you'll find that the universe is manageable. And so, and the other thing is, if you're truly interested in it, it's enjoyable. It's not a slog. It really is, just finding these amazing people doing amazing work. And then they'll tell you about someone else they know who's doing something interesting. So a lot of it's organic, but it does come back to this structure that's in place with Brian and his team. And then, as Lisa was saying, there are accountants and there are tax lawyers. So, ultimately, I'm the quarterback of the entire picture. But I don't do anything in isolation.
Yeah, that's great. And so Brian, I kind of want to build on that. This idea of having, maybe the estate attorney and the tax specialist and the philanthropy advisor and the wealth advisor all working collaboratively to optimize a client's impact and align. I wonder if you could talk a little bit about like what makes that work in your experience. And maybe we'll also, ask you the more provocative, what makes it not work? What breaks it down in your experience?
Let me start with the second. I think what breaks it down is when any one of those important parts of the equation don't see the value in helping the client achieve their goals. And from an advisor perspective, I alluded to this earlier, sometimes advisors don't like to have assets go outside of their own platform. I think that's very short-sighted. I think you're strengthening your relationship when you're helping the family you're working with achieve what it is that they care about. I think that the long-term benefit to that relationship is strengthened. So I think that's where things can break down, is when any one of those pieces, and I think those are the right surrounding advisors and collaborators with the client on helping them achieve their goals. What goes right is, if we're all saying we care about what Homer wants to achieve, let's work together to figure it out. What's the tax impact of doing this? Where in the estate structure does it make sense for this investment to live? If maybe you have different trusts or different entities. Homer talked about, caring about what his kids think. So when you're looking at a trust that's generational in scope, putting things in there that might be very long dated, but that have a really great impact, are perfect for that type of a structure. So I think that collaborative approach is really, really critical. And as an advisor, you don't have to be the one that's directing everything, but being part of that process is really, honestly, I'll just say it, really rewarding to see the client's values actually be achieved over time.
Well, so two things I'm hearing you say, Brian. I don't want to put words in your mouth, but this is kind of breaking through loud and clear for me. It's like, one, it's really important that advisors, and I imagine all the different sort of entities and team members involved, have to be able to check ego at the door in order to be able to really collaborate in service of the client. And then second, that, investors it's almost what I hear you saying is like, they should have an expectation that this is how the team is working together. Like, it should not be extraordinary that the team around them are working in service of their needs. And I think that's a really powerful framing. because I think probably there are some folks I imagine on this call and outside of this call who really want that, but think it's sort of a nice to have as opposed to a baseline. I'm going to ask our audience one more question, but it is time. I'm going to ask our panelists one more question. Audience, it is time for you to roll up your sleeves and get typing. Would love to get a couple of questions in the chat for our folks. So go ahead and pop them in the chat while they're answering this next question, and then I'll pick some or read them and see what we can do. So again, would ask all our audience members to try to submit one or two questions in the chat to get us going. And while they're doing that, I have an additional question. And I didn't ask our panelists this ahead of time, so forgive me for that. But one of my favorite questions to ask is, if you had a magic wand and you could just sort of like wave and change one thing about the way impact investing works right now and the way that investors kind of find their way into impact investing right now, what would you change? What for you is the single greatest leverage point? And Brian, Homer, you're nodding, so I'm gonna take that as you have an answer. And
I do for sure. And I just want to say before I forget how important to me Impact PHL has been in this whole ecosystem in terms of finding investments locally, which is one of the things that's most important to me, is just from convening in that community. To layer on that and answer your question, Mike, I think the biggest issue, the biggest kink is diligence. Is how do you diligence these opportunities? You're a single person or you're a small shop, and the universe is huge out there in terms of options. And so figuring out how to do that, and there's Investor Circle and there's some other groups, there's CapShift, but really understanding how to approach these investments so that they don't feel so opaque and that you really understand the risk profile. And that's hard.
That's great. Brian, do you want to go next?
Homer kind of stole. I honestly, and Homer knows this, I've been working for a while on trying to figure out a way. We have a really great impact platform and really good people that are focused on trying to make that as robust of an investment platform as it can be. But what's missing is those local opportunities in communities that people like Homer and others care about investing in. So how do we create a way for those? It's not even the diligence, although I agree with Homer. It's just awareness of the breadth of opportunities that might exist in any one market that people that want to invest locally can access. So having that, so I did kind of steal Homer. So I'll say one other thing, and I alluded to this earlier, which is, that if I could wave that magic wand, it would be to have there be clear data that's accessible to everybody that shows that you do not need to sacrifice returns in order to be an impact investor. That impact investing can get you market returns just like any other investing. Risks notwithstanding, which they obviously are. So those would be my two wand waves.
Great.
Lisa. My two wand waves would change the signals. So one really would be changing, evolving the fiduciary duty definition to clearly include the material risks of political instability, climate change, governance, etc. Second, I would go even higher. I would just get rid of GDP, stop measuring that, and start measuring genuine progress so that countries can evaluate themselves based on actually the life-giving forces within their country as opposed to the throughput of money.
Yeah, that's great. Okay, I'm going to turn our attention now to some of our audience questions. Let's see. I'm gonna read Matthew Thornton's question. Is there anything interesting in the marketplace that allows public equity holders to align the proxy voting with their values? Great question.
As you sow.
Okay.
I would start with that. As you sow. Maybe Corey's putting it in the chat, so start with that.
Great. Great. Anything to add there, Brian or Lisa?
The Calvert Fund family has, ways that you can, they take proxy voting seriously, and they will issue reports that show you how they're making an impact through that. So I'd say the Calvert family is something to explore.
Great.
Yeah, I'll just double
ahead.
down on as you sow as in SOW. So
Great. Okay. I'm seeing some sort of commentary in the chat, affirming, Lisa, your point about unpriced risks and how important it is to know that. Can our panelists comment at all on where and how to elevate that discussion across the broader field? How do we get people talking about that? How do we get people understanding that more?
Yeah, I mean, I think, look, in terms of the externalities, as we call them, those costs are starting to show up in the marketplace, particularly when it comes to the insurance markets, right? So it's always seemed to me that climate change in the marketplace would be driven by insurance, because ultimately they're on the hook. I think there are signals you can get from what's going on in the insurance markets to understand how to price in at least climate externalities. I can't, maybe Lisa has ideas about governance that I haven't examined.
Yeah.
I'm trying to work on it really from right now. I mean, I think that insurance is the best market indicator. My daughter lives in Miami. She either can't, she can't get, there's only like one or two insurance providers, and she pays $20,000, for insurance it's just incredible. So they're already pricing it, but many of us are not paying attention, or it's not impacting our insurance prices. So I seek to go to the altruism in each of us and the recognition that getting something at the expense of somebody else, at the expense of child labor in Indonesia, or health costs around, or fires, is just that you'd rather not participate. So find a way that maybe you can minimize that. That's where I'm at for now.
Homer, were you going to add to that?
Yeah, there are affirmative signals out there as well. I mean, for example, the firm that I co-founded about 5 years ago is a B Corp. We chose to be a B Corp because when you have a third-party certification regime that is, pretty extensive, it creates a framework for other people to judge how are you doing against, a base case. And there are a lot of third-party certification regimes out there. I know mostly the ones in the real estate space, but they do exist. And I think those can be helpful as a guide. But again, you've got to educate yourself on which ones are legit and which ones are sort of greenwashing.
I'm going to ask one last question here, kind of moderator prerogative, and that is, in the current political climate, which is charged, it seems like everything from, pop culture to, I don't know, eating a hot dog is sort of rife with political partisanship. To what level is that a threat to the continued forward momentum in the field of impact investing? And what, if anything, can all of us be doing to mitigate that threat? And again, that's a surprise question. So
I can chime in a little bit here.
Great. Go ahead.
I'm hearing a lot of sort of sentiment from clients. I think that, some programs and corporations are reevaluating, their equity, diversity, inclusion verbiage on their website and stuff like that. If anything, I'm seeing people doubling down. Investors that care are doubling down on this. They're more interested now in looking for ways for their dollars to make an impact. They're more interested in exploring ways that they can be value driven. So yes, the political climate, a lot of people might think that it's some of these opportunities are drying up. I'm not seeing it. I'm seeing the opposite. Where people really care, they're even more invested than they ever were in trying to solve problems. just
any
a
other?
small
Yeah.
anecdotal, group, but that's my observation.
Yeah.
Yeah, someone in the chat raised the question of, how do you know that the impact is occurring? And that kind of reporting is important. It's critical, and it's also spotty because there aren't sort of baseline. It's hard to get the kind of baseline numbers you can get just from pure financial returns. You're not going to get the same thing. And so, part of it, I think, when you're looking at potential investments, is to look at the reporting that comes out from those investments to date. What are they telling you? What are they telling their investors on a regular? I have some investments where I'm hearing monthly. I can't keep up with the amount of reporting they do. And it's great because a lot of it's really interesting. And then there are some that just stay silent and you start to wonder, like, okay, what's going on here? So I think just like in any relationship in life, the more clear communication you can get from those with whom you're investing, the more reliable the impact that they're having will be for you.
Well, okay, as we wind down here, first of all, I just want to thank our audience for their participation in your questions, and participating in the chat storm and the polling. And I especially want to thank our panelists. This was amazing. You guys are so thoughtful about this, and you're leading by example. And we're just very kind to take the time to share your insights. What we promised is that we would leave today with a concrete resource. And my sense of the audience is many of you don't need this because you're already well down this path. But I would encourage you to share the resource with folks who might. And the idea here was to design a very simplistic resource, very similar to what we use with many of our clients in my philanthropy advising practice, just to help people get over that hump, that little bit of resistance that they might feel. And so we're going to put up a QR code here, and I think a link of some sort, which will take you to kind of a document. And the link is also in the chat. And what this is, and this is something our firm sort of designed, again, it doesn't get any simpler than this, but everyone can feel free to use this, it's a straightforward 3-step process to break this barrier and get someone from, kind of paralysis to motion. And the first step is very simply mapping their current ways that they're using their current capital. And the beauty of that, of course, is that most people already are doing some form of giving or are doing some form of political activity or using their talents in different ways. And impact investing tends to be kind of a lagging kind of part of that portfolio. The second step is then taking what they're already doing and converting that into sort of some thematic values or topics, issues, areas, regions that they're really focused on. And then 3 is turning all of that into a very short email that they're sending to their advisors to initiate the conversation. I think we can take the QR code down. For anyone who wants to work on this or spend a few minutes, I'm more than happy to stick around. And you can come off mute, members of the audience, if you want to kind of chat about using this resource or getting started. And also happy to include in the chat here my email address. If folks have follow-up questions or want to have a conversation, I'm more than happy to be a resource. But I want to conclude by saying thanks so much to Corey and to the Impact PHL team for doing a great job pulling this together. Thank you again to our panelists who led an incredible discussion. And thank you to you, our participants, for being here. Go spread the word. And be sure to click on the events page of the Impact PHL homepage for lots of upcoming, really exciting webinars.